Dhirendra Kumar, CEO at Value Research, who better than him to really understand whether or not it makes sense to subscribe to the CPSE ETF this time or not. Dhirendra, just looking at the past performance, I know it may not be the correct benchmark really for any fund's performance, but would you say that this third tranche is a subscribe?
It's a, one cannot look at this fund as a long-term investment to be part of one's portfolio. The behavior of this fund, being a PSU fund, a fund made up of only PSUs, government-owned companies, and that too today it is 82% energy stocks. If you look at the top 4 holdings, they account for 80%: NTPC, Coal India, IOC, and ONGC. So the behavior of this fund is like, despite being large companies, the performance, the nature or the character of the performance is like that of a small cap. Then comes, and every tranche comes with some discount, some an incentive for you to subscribe to this, and in that sense, the 4.5% discount even now makes sense. Maybe this is the kind of fund where active investors, despite being an ETF, I think one has to take one could only take a short-term, medium-term call on such a fund, combined with the discount that is offered all the time. But 4.5% discount is also something which does not make me think. It has happened always. The initial offering in 2004 came with a bonus, a promise of bonus for the initial holders if you held it for for at least a year. This time every discount is upfronted. You get it at a discount at the time of allotment itself. So it's a small, nice incentive. If you take a short-term, medium-term view, consider it. But I think most long-term investors can do without it. Primary reason being that it is a compromise on diversification. And public sector companies do not make a compelling choice for investors anyway. They have all the strengths, but they don't really create shareholders value over a long period of time for a variety of reasons, which I would not like to delve deeper into.
No, that may be the case, but even so, these ETFs have found favor in the market in the past as well. What is the approach that you would ask investors or potential investors to look at when they're comparing returns of an ETF versus a mutual fund?
No, I don't think ETFs have actually found favor. Some ETFs have turned big because of a very unique reason. The Nifty ETF, which has turned into the largest Indian equity fund in the shortest period of time, is entirely because Employee Provident Fund organization invest only in that fund, and that is the vehicle. And they have chosen, rightly so, they have chosen to invest in an index. And ETF turns out to be that turns out to be the lowest cost, participation mechanism for them. Also, they are, because it is investing in large cap stocks, the Nifty ETF, Nifty being replicated in that ETF. You really don't have to look at the other, the counterparty liquidity. Of course, the secondary market liquidity in most ETF is very poor. I don't think index ETFs are finding favor. For most ordinary investors, getting diversification, getting their money actively managed, and being able to do their SIP, which has become which is well on its way to become a mainstream way of savings and investments for individual investors, that makes sense. Yes, for some, maybe over a period of time, now we are finding there is a possibility that over a period of time, some of the ETF, large cap ETF, might find favor. But ETF is complex for ordinary individual investors to buy. They are not used to the stock market mechanism. Maybe you land at a broker's place to open a demat account to trade your ETF, and maybe you end up doing something completely different.
Dhirendra, I know the constituents are names which are out of favor and fashion right now. The constituents include the likes of ONGC, Coal India, IOC, NTPC, PFC, REC, BEL, Oil India, etc. But just suppose someone wants to take exposure to these government companies and is hell-bent on having at least a minuscule part of their portfolio invested into these names. Would you say the CPSE ETF then is the right instrument?
Oh, I think that they're good companies. The only problem is that you can't do anything about your parentage, and they are likely to remain one. It is the government's need to raise money. That's why they keep coming with the tranches, or this Bharat 22 ETF or the CPSE ETF. They have found this to be an alternative way of raising money quickly, and raising money with a very small time gap. Their ability to raise money without spending a lot of time. So it is an easy way for the government to raise money. Maybe for investors also, for some investors it might provide better diversification than actually having couple of PSU stocks. But investors have plenty to choose from, more so after this correction. So maybe the only reason why they actually become tactically interesting is the 4.5% discount, upfront discount which you get. So buy it, sell it, and you make 4.5%. And assuming that there could be little upside in a matter of some time, that could be an opportunity. Nothing beyond that.
Okay, interesting. So to summarize, Dhirendra, because I wouldn't believe that this would be the last tranche. I think it's a product that the government is convinced works for them. What should be the approach?
No, maybe some institutional investors, large institutional investors, they take a view and they take a tactical view. They try to maximize the return. My views are particularly, pertain to, or they are meant for individual investors. Individual investors have a very specific need. They need to diversify, they need to work on a plan, and they need to work on a plan which is not intimidating. This fund will not serve their purpose. 4.5% discount, public sector companies, good Navratnas, well-managed companies, strategic advantages, maybe, and maybe some strategic sale at a future point. The value might get unlocked at a future time. Maybe this is opportune time. We are witnessing, these stocks in general, and quite a few of them in specific, are they have gone back in time on the stock price by nearly 1.5–2 years, much more steeply than the overall index. So I would say that somebody is taking a short-term call, but most individual investors should not try and time that. So my views are different for individual investors. The appeal could be very different for institutional investors who might find it attractive at these levels at this discount.
Okay, Dhirendra, we leave it at that. Thanks very much for joining us.